What if I told you there's an investing strategy that quietly turned $10,000 into nearly $1 million? And it wasn't luck. It wasn't timing the market. And no, it wasn't some flashy crypto scheme or Wall Street secret only billionaires know. It's a strategy so simple, a 13-year-old could understand it. Yet so powerful, it beat the market for 17 straight years. Most people have never heard of it. Even fewer actually use it. But those who did, they changed their lives, not overnight, but steadily, predictably, and with far less risk than you'd ever imagine. And by the end of this video, you'll not only understand it, you'll know exactly how to start using it today. But first, if you've ever felt like investing is confusing, overwhelming, or just something rich people do, then this video is for you. Because this formula doesn't care about hype, it only cares about results. Before we dive in, do me one quick favor. If you want more content that breaks down wealth building in plain English, content that actually helps you escape the paycheck-to-paycheck trap, then hit the like button, subscribe, and share this with someone who needs it. Let's build wealth together, the smart, simple, proven way. Now let's get to the good part. Imagine this. You're watching the stock market. One day, a company's worth $1 trillion. 2 months later, it drops to $650 billion. Then it climbs back up to $1 trillion again. Did the business itself change that fast? Did they hire 50,000 new employees overnight? Invent a new iPhone? Double their sales? No, but the stock price changed dramatically. Why? Because the stock market isn't logical. It's emotional. It reacts, not just to earnings reports, but to fear, greed, news, tweets, and sometimes nothing at all. Joel Greenblatt, a hedge fund legend and best-selling author, saw this irrational behavior and thought, what if we could use the market's emotions against it? What he discovered became one of the most effective investing strategies ever created. But before we reveal that formula, let's ask a deeper question. How do you actually know what a business is worth? Let's say your friend owns a store, the Swedish merchant. Last year, it made $100,000 in profit. How much would you pay to buy that store? $500,000? $1 million? $2 million? It depends, right? On how stable the profits are, how long they'll last, whether the business is growing, and how confident you are in what it will earn 5 or 10 years from now. Now imagine trying to do this for Amazon, Tesla, or Coca-Cola. This is what investing really is, buying small pieces of businesses and hoping the price you pay is less than what they're truly worth. But most people skip this part. They buy stocks like they're lottery tickets. They chase trends, hype, and hot tips, and then wonder why they lose money. Greenblatt had a better idea. What if we just focused on 2 numbers to find great businesses at great prices? That's where the magic formula begins. Let me ask you something. Would you rather buy a business that earns $100,000 a year for $1 million or one that earns $50,000 a year for the same price? It's obvious, right? That's price to earnings, or PE ratio. It tells you how many dollars you're paying for every dollar of profit. Lower is better, assuming the profits are real and stable. Now, imagine 2 businesses. Each cost $500,000 to start. One earns $100,000 a year. The other earns $20,000. Which one would you invest in? This is return on assets, or ROA. It tells you how efficiently a company turns its money into profit. Higher is better because it shows the business is productive, profitable, and well-run. So Joel Greenblatt asked, what if we buy companies with low PE and high ROA? In other words, businesses that are both cheap and excellent. And when he tested it, what happened next shocked even the professionals on Wall Street. Because this wasn't a gimmick. It was data. 17 years of it. And the results? Let's just say they would make most financial advisors blush. But hold that thought. We'll get to the exact returns in a moment. First, let's break down how you can use this formula today, step by step. Here's how the magic formula works. Go to magicformulainvesting.com, a free site built by Greenblatt himself. Select a minimum company size, say $50 million or larger. The site will rank companies based on high return on capital, quality, low price to earnings, value, Pick 20 to 30 of the top-ranked companies from the list. Spread your investment across 5 to 7 of them every few months until your money is fully invested. Hold for 1 year, then sell and repeat the process with new companies. That's it. No stock tips, no day trading, no guessing, just a disciplined, repeatable process. Now, remember that cliffhanger? Let's talk results. When Greenblatt tested this strategy from 1988 to 2004, across 17 years, the magic formula returned an average of 30.8% per year. Let's put that in perspective. The average investor, around 6 to 8% per year. The market, roughly 12%. This strategy, nearly 3 times higher. So what does that mean in real numbers? $10,000 invested using this formula grows into nearly $1 million in 17 years. Meanwhile, $10,000 in the S&P 500 would grow to just $70,000. Now, not every year is a win. Not every stock will be a hit. But on average, this formula quietly beats the market and does it consistently. That's why this video exists, because no one's talking about it, and more people should be. Now here's the funny part. Most people who hear this still don't follow it. Why? Because it's too simple. It's not flashy. It's not exciting. It doesn't promise overnight millions or get-rich-quick wins. But wealth isn't built in moments. It's built in systems. It's built in consistency. Most people chase hype. Smart investors chase value. And the smartest ones, they let formulas like this do the heavy lifting while they focus on living life. You don't have to outsmart the market. You just have to stop letting it out-emotion you. So here's the truth. If you're tired of guessing, if you're done gambling, if you want a strategy backed by data, logic, and long-term success, then this is your wake-up call. The market will always have noise. But the signal? The real signal is value and discipline. Start small. Stay consistent. Let time and compounding do the work. Because the moment you stop chasing hype and start following proven principles, that's the moment your financial freedom begins. If this video helped shift your mindset, even a little, hit like, click subscribe, and share this with someone you care about. You never know who might need to hear this. And if you want more deep dives like this, breaking down powerful wealth-building strategies in plain, relatable language, let me know in the comments. Remember, it's not about beating everyone. It's about beating your past self, one smart decision at a time. See you in the next one.